Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, before we get into the market rundown, we've been getting some questions about what the live stream entails as part of the Chart Guys membership. So rather than try and write it out and explain it, we're just going to do a public one this Friday from 9 a.m. to 10:30 a.m. So if you are interested in that, it'll be on our YouTube channel, and that'll give a little bit of insight as far as what we do on a daily basis. So looking at the S&P 500, we had the FOMC reaction today. We had Apple and Facebook both with earnings after hours. FOMC, bull reaction. Apple, bull reaction. Facebook, bull reaction. The bulls remain in complete control. The market's at all-time highs. After hours, it's at even more all-time highs, higher all-time highs. The burden of proof remains on the bears to prove anything to us, and that's where we stand. Bulls in complete control. That's been the case as long as this weekly uptrend's been intact, which has been the last 10 months. So, some little details about today's action. We had a little headline come out in terms of Chile canceling, I forget the exact title of the meetup that was going on, but that's where China and the US were going to be looking to sign phase 1 of the trade deal. And the news of that canceling came out and the market dumped. And then that's the bots and the algos reacting to the headline. And then the market realized that has nothing to do with the China and US deal, and it doesn't matter, they'll just find another place to sign it if they're going to sign it. So this entire move lasted 45 seconds, but it's just a good reminder as to what is possible when bots and algos are reacting to headlines, and also a little point in favor of humans being a wee bit smarter in terms of realizing that that news is not bearish in the way that the market initially reacted to it. So we then held the low of the day by 11 cents on the FOMC reaction, and that allowed the bulls to stay confident, because we can clearly say if we don't break the low of the day on the FOMC reaction, the bears aren't going anywhere. So we had the high of the reaction, low of the day, double top at the high of the day, higher low, bull break and run to all-time highs, and then bullish action after hours in response to the tech sector earnings. So should we be preparing for a crash? Absolutely, it can't hurt. The best time to prepare for a crash is when we're at all-time highs, so you have a game plan established and you know what you're going to be doing. Should we be playing this market bearish and continuing to buy the volatility sector and continuing to short things? No, absolutely not. We are not going to be fighting the trend in this market. We are bullish as long as the weekly uptrend is intact. We now have 6.5% to work with above the last weekly high or low. And again, this is what has kept us bullish in this market. When we pulled back the last dump in July, we said, well, as long as we hold the June low, it's a higher low. And then back here again in September, the pullback, we said, well, as long as we hold the August, it's still an uptrend. And that has proven to be the way to be looking at this market, because the trend is your friend. So you can be looking bearish for short-term little day trades and little flips, absolutely. But overall, there is no weakness in this market right now. I am well aware that the fundamentals are saying other things and people keep pointing and pointing to other things, but the market can stay irrational longer than you can stay solvent. So let's just go with the flow. And when we see a shift in momentum that is long lasting, it'll be very clear, because again, volume will have to be behind it. Where's the volume? It's not here, but we didn't need it. All 2017, we ran up 30% and there was no bull volume here. So very low bull volume, but again, that's not an indicator for me. As far as volume in the S&P 500, the only way that I look at it is bears have to have high bear volume to prove anything to us. Otherwise, we're going to be looking for bulls to buy those dips. So until then, bulls in full control. 302 short-term support. After that, we're looking down at 298.50 as another higher low. When we lose the daily uptrend, we'll zoom out and we'll look for a weekly higher low to form. We're getting more follow through this time than the last time we were at the high, where the S&P 500 cash level didn't actually even get that all-time high. Only thing we need now is just IWM. It's the only sector here that we look at that has not broken resistance yet. So 158.92 will continue to be key. Daily higher low trying to form. It's a little bull flag. Anything above 153.47 keeps the uptrend intact. Bulls have to break 157.34 and 158.92. If we stay in this weekly equilibrium in IWM, that will likely mean that we need to consolidate for a weekly higher low in the S&P 500. So I am keeping an eye on it. It's not going to sway me too much from the bullish sentiment in the market right now, but it'll be noteworthy whether or not we break resistance and join everybody else or pull back and remain in this multiple month-long equilibrium. So QQQ, daily bull flag after hours. We're seeing some higher trading due to the earnings responses. So we're going to be looking at the all-time high, 197.83 on the table tomorrow, and we'll see if the bulls can break that level. We'll be looking up towards 200 psychological resistance after that. XLF also trying for a little daily bull flag. Anything above 28.23 is a daily high or low. Bulls have to break $29, and then we're looking at 29.07, and that is the highest price that we've seen in a long time, almost a year and a half, if we can get over 29.07. And again, weekly bull breaks and weekly key supports will be on watch for both QQQ and XLF if we do see any weakness in the short term. XLV is on fire. The third largest holding in the S&P 500, the healthcare sector, is exploding the last 4 days and playing catch up in a very big way. We had a weekly lower high and lower low, straight into a bull move and resistance break. So a bit of a fake out there, absolutely, but we're looking at 95.92 and then 96.06, the all-time high. And again, if we see XLV hit the all-time high, that only adds more fuel to the fire of these market bulls. So IWM and XLV, two little resistances to be watching to see if these bulls can add extra jet fuel to the market bulls. Biotech sector, anything above 79.71 is a daily high or low. Resistance is 82.80 and 84.12. With 84.12, the more important level for me, that's the level it has to break for the weekly lower highs to break. The VIX, bear flag on the daily, confirmed, dropping down to lower lows. Next, we're looking at $11.70 and $11. Bears in complete control, and we've got this nice clear little lower high pattern. 15.20, new lower high is 13.80. Anything under 13.80 keeps the bears extremely strong. And keep an eye on the RSI because there have been times, the RSI doesn't really get oversold here. If we're looking back multiple years, the low RSI that we see is 35, 34, 35, 35, 34. So we bounce from the 34 to 35 RSI range, and we're currently at 38. So if we were to see another couple days of upside in the market and another couple days of downside in the VIX, I like historical RSI levels as guides in terms of what to be looking for. Can we drop below 34? Yeah, we dropped to 32 once in the last 3-4 years. But if we can see that we're bouncing from the mid to upper 30s and we're approaching the mid to upper 30s, that's worthwhile enough to be keeping an eye out for the potential of a short-term entry in the volatility index. But again, I would want to see another leg down and another few points off of that RSI before I got interested. Gold had a bearish reaction initially and then a V-shaped recovery. Unfortunately, we're not getting clarity that I was hoping for on the metals. If you've been watching these videos, you remember me saying, as long as we're within this range, I'm not trading gold and I'm patiently waiting because there's a lack of clarity and it's choppy. Well, here we are, still in the middle of this range. We did hold daily support, 1480. We bounced just above that level. Anything under 1520 is just a lower high. And the burden of proof in the metals is on the bears because remember, this is extremely healthy consolidation after the 2-year equilibrium bull break. And we're going to be looking at if the bulls can hold this support level, just slowly trying to recover and make their way back up to the mid to upper 1500s to try and see continuation on this move. So again, the burden of proof is on the bears, absolutely. Let's actually see this falling wedge that we were watching. Let's see if we're back testing. We actually fell a bit below it. Anyways, still bullish gold and silver until we break the lows of current consolidation. So as long as those hold, bulls are fairly comfortable. Silver, daily higher low forming. Resistance to break is 1831 to try and see continuation of this daily bull break that we saw last week. And the miners had a V-shaped recovery today. I actually got stopped out trying to play a lower high. I was looking for the bull miners to give us a 5-minute lower high after some V-shaped recovery and then stopped out once we just blew through resistance and headed to a new high of the day. But Overall big picture, daily higher low has formed. Bulls need to get back over 28.18 to keep this little mini daily uptrend that's been intact for 2.5 weeks now, to keep that intact. Oil, bullish reaction. Well, actually, pretty much a non-reaction to the inventory report, not bullish. We're looking for a daily higher low compared to 52.70. We have to change the 4-hour trend for that to form. We had an initial bearish reaction. We broke short-term support, but didn't see any follow-through. Clear 4-hour lower highs here, 56.89, lower high at 55.86, lower high at 55.70. Anything under 55.70, just a 4-hour lower high. Have to change that 4-hour trend for the daily higher low to form, but that's something we're going to be looking for in the next couple of days because the bulls have a lot of space to work with to maintain the daily uptrend. Natural gas bulls keep pouring it on. That 4-hour higher low formed yesterday. Our new 4-hour support is 248. And anything above 248 keeps the bulls in full control. We did break resistance. We didn't get a ton of follow through, but we still have this 4-hour uptrend. So anticipating the most likely scenario is a lower high compared to 2708. That's beginning to shift. And what I'm going to be looking for to give me the biggest clues, first things first, is obviously the massive move, but the volume behind this move starts to tilt the needle back in favor of the bulls for the potential that they can break 2708 without needing weekly consolidation under that level. I would expect daily consolidation is needed, but that daily consolidation is going to give us a lot of insight. Because if we were to pull back, let's say this is our top, even though we're not confident in that because the 4-hour uptrend is still intact. But if that were our top, and if we were to pull back for a higher low to 245, then I would say, yeah, we're likely going to need weekly consolidation and a tightening weekly range. But if daily consolidation just pulls off a little bull flag back to 250, 249, then we could easily see continuation and head up towards that resistance level. So the past few days have opened the possibility to a weekly trend change not needing a lower high. But again, I want to see what consolidation looks like. I know what the bulls have. They've shown us what they have the past couple days. I want to see how they hold up, and I want to see how the bears respond when we do see some daily consolidation and when we do lose that 4-hour uptrend. So that's where we stand overall. Market bulls in complete control. Check us out Friday morning, 9 a.m. Eastern on our YouTube channel, Chart Guys. Hope you have a good day, and we will see you then.